So yeah, as Ginger said, my name is Jeff Davis. I'm with Hinman and Associates Insurance. We're a local independent insurance brokerage. So been doing that for about 14 years. But yeah, James and Mitch, I think what stemmed this was you guys had a real estate attorney that presented a month or two ago, and they kind of wanted to see the counter side of that. And really, I think for the most part, we're on the same page as far as that stuff goes, but they might see things slightly differently than what we do. So I appreciate you guys having me here and the opportunity to speak. And then, yeah, I apologize. I know I didn't get you a biography in time or anything like that, so you didn't have a chance to, not that insurance guy usually ever sells a meeting, but maybe that's part of it too. Nobody knew who they were showing up to hear speak. So that could be the turnout as well.
That's not it. Yeah.
So yeah, anyway, my name's Jeff. I was born and raised here in Reno. So been living here my whole life. I've got a wife, Jessica, and she co-owns a interior design firm here in Reno, and we have 2 kids. Our little girl just turned 2 on Sunday, and our boy will be 4 in about a week and a half. So we've got our hands full with the kids. Let's see, hobbies. I don't have as many ever since I had 2 kids, but I used to ski quite a bit. I am in a bowling league. I'm actually skipping my bowling league to be here right now. So the way I've been bowling lately, my team thanks you sincerely. So they should be quite a bit better off without me right now. I graduated from the University of Nevada, Reno in 2004 with a finance degree. And like I said earlier, I started in the insurance industry in 2009. Started with a captive company called Country Financial. They're a smaller company, was there for right around 5 years before I started at Hinman and Associates as an independent broker in 2014. So I've been there, the better part of 9 years and change now. And then myself and 2 other partners purchased that agency from the prior owner beginning of 2021. So here we are. We've got offices in South Reno, and I work at the office in Sparks, which is on Pyramid, right across from In-N-Out Burger. So, again, so focusing this towards your real estate investing thing. I know the attorneys were talking about asset protection and what they would do. So obviously you can form different entities in order to separate them from you personally, but you also, regardless of the way that you're going to do it from an entity standpoint, you need to make sure you have the proper insurance for that entity. So it could go kind of 2 different ways. You can do it for personal lines or commercial lines. Sometimes your hand is forced based on the type of risk that you have. Sometimes you could go either way. And which way is the better way? Well, I don't know. That kind of depends on situation to situation. So for what would qualify under a normal personal lines policies from a real estate investor's standpoint, anything from 1 to 4 dwellings or 1 to 4 family dwellings is usually considered a personal lines policy. So your single family homes, your duplex, all the way up to a 4plex. Most companies have a maximum number of total doors that they're gonna let you have under personal lines. So for most companies, it's usually no more than 8, some do fewer than that, but I feel like 8 is the most common number I see from my carriers. So if you own more than that, at that point, they're considering you a commercial risk and they don't want you on personal lines insurance paper anymore. Typically private ownership, although some carriers will do the LLCs. The attorneys a lot of times will recommend that you put your homes in LLCs and you have those owned to separate your liability from your personal. It does make it a little bit trickier from the insurance standpoint in that I would say, well, yeah, most. A good 60%, 70% of the carriers that write personal lines insurance aren't going to insure a home owned by an LLC. So your things that are going to go to your commercial lines insurance policies are going to be, anything 5+ units. If you own an apartment complex, that's commercial paper right away. Again, you could own single family homes. If you own 9 or more of them, that's also going to be on commercial insurance paper. Partnerships are business entities. So if you're owning the assets with unrelated parties, usually you're looking at commercial entity from there as well. So it's one thing if it's a husband and wife team that own something together with community property state, but typically if you have any type of a partnership, you're going to be insuring those things commercially as well. And then I didn't do much with non-habitational stuff because I think both Mitch and James told me that you guys are primarily in habitational type of risk, but if you do own, other types of, office buildings or industrial buildings or anything like that, obviously that's going to be insured commercially as well. So if you can insure your investment properties under a personal lines insurance, some of the advantages of doing that, more carrier choices and less complicated policies. So these things work just like your standard home insurance policies, really. Pretty much any agent is going to be able to write them, from your captive farmers and state farm guys to an independent broker like myself.
Tell them what you mean by captive versus.
So a captive agent is somebody who works for the company. So like a farmer's guy or a state farm are two of your biggest names that you would hear in the industry. They work for that company. They only offer that company's products, whereas I'm independent. I like to say that I work for my clients. I'm appointed to sell a lot of different carriers' insurance products. So that's the difference there. And then you can bundle it with your homeowners and auto insurance if you're insuring the stuff, your assets on personal lines insurance. So the advantage of that is more discounts. Again, you can have typically one person to do all of that stuff for you, and you're not dealing with 10 different insurance people. So, and then another advantage there is lower premiums usually, although I will say my personal lines clients might not agree with that in this market right now. I think everybody's seen some rate increases recently. So that's debatable, but for the most part, you can argue that the premiums are lower on the personal lines world. So some disadvantages of insuring your investment properties on personal lines policies. So no separation of liability. And that's one of the things that the attorneys will really harp on, right? So if you own your investment property in your own name and something happens at that investment property, any asset that you own can be on the line for a lawsuit in that. So it is certainly something to consider. You're going to have a separate policy for each owned unit. So a lot of different policies, whereas in some commercial insurance, depending, we can put everything all in one policy. Lower base liability limits. You're typically not going to find carriers that are going to offer more than $500,000 on the policy itself in liability for a rental insurance property. And then some carriers only provide premises liability. So you really want to read your policy contracts when you're doing that. And what premises liability, it's just like it sounds like. The only thing it picks up liability for is anything that happens on that square parcel that you own. So you have a tenant that, say, has a dog, gets out and is off property and bites somebody, something like that. That's not going to be covered. Things like wrongful eviction, libel, slander, things like that, also not covered under that. So you got to be careful and know the contracts of what you're purchasing. And then I also put, for a disadvantage, is LLC ownership is often not eligible. So if we're going to insure our investment properties on personal lines paper, who is it right for? So obviously people who own their rental properties personally, and people who hold their rentals long-term. So I would say my advice to my clients is, if you're looking at somebody who's just accumulated a couple homes over the years, maybe you have kind of upgraded and kept your prior home as a rental several times. It's not necessarily your focus as a main source of income for that. That's a great opportunity to not overcomplicate the situation and have those properties insured under personal lines paper and in your personal lines name, and people whose assets can be covered with a personal umbrella. So Mitch was talking about that a little bit in the beginning of the meeting. The great thing about having those in your name and insured under personal property is your personal umbrella can pick them up. They start at $1 million in liability. Most carriers will go to no problem, up to $5 million. usually is pretty easy to do, but requires some underwriting approval. Anything $5 to $10 million range can get a little bit tougher to get into the personal lines. So the LLC ownership for personal lines is maybe. Some companies will do it if you have your homes in an LLC. Now, typically they want to know that this LLC is really formed for nothing other than separation of assets / asset protection. So if your LLC is involved in any other form of business besides just the ownership of your investment properties, your personal lines carrier is almost always going to say no, and they're not going to want to be part of that. So who it's not right for, very high net worth individuals. So like I said, the proper liability protection, or the most liability protection you're usually going to get on a personal lines umbrella policy is 5 million, or with exceptions. But if you're worth tens of millions of dollars, that's such a small piece of your pie that it's not worth putting everything you have at risk for something that could happen at one of those properties. So my recommendation in that case would very much to be to form LLCs of some type, separate it out, because you cannot get enough liability insurance to adequately protect you for anything that could happen from that when you're worth that. People buying and selling on a regular basis, that's more business activity. If you're flipping homes, if you're buying them on the courthouse steps at auction and then selling them for a profit, that really is more of a business risk as well. So same thing with, the flipping and renovating. So I put when it walks and quacks like a business duck, it's probably a business. So that's just a couple considerations there. So considerations if you are going to go the personal lines route with insuring your assets. Always write an umbrella greater than your personal net worth. So if you own all those homes in your own name, you got to take in, obviously, what the properties are worth, what you owe on them, what your income is, what your other assets are. And the more rental properties you have out there, the more exposure it is. It's more chance that something could go bad and you could get sued for it. So that umbrella piece is very important. Now, not typically very expensive for a personal lines umbrella, especially if you don't have a ton of exposures out there. So the more things you own, toys, cars, rental properties, things like that, that's obviously more exposure. It's going to increase the cost of your umbrella. But I mean, typical, my umbrella policy for $2 million cost me like $600 a year. So super cheap, relatively. So I think one of the first things, make sure you have coverage for comprehensive personal liability. So I touched on that a little bit earlier, premises liability versus comprehensive personal liability. That's going to pick up your libel, slander, wrongful eviction, things that tenants can sue you for. So not all policies include that. You want to read your paper, make sure it does. To LLC or not to LLC. So again, this is where I would have loved to see the real estate attorney's presentation, because they get paid a lot more an hour than I do. So they probably went to school longer and might be smarter as well. But some of the times, like, when I see, to Mitch's point, somebody who has 4 properties and they're all owned in a different LLC, cost them thousands of dollars more in insurance when their net worth's like $1 million, and they could have easily, got an umbrella for triple their net worth and been done with it and called it a day and have a ton of different insurance options. So I would say, for the most part, if you are the person that this personal lines thing makes sense for, just buy the right liability protection. No reason to put everything in an LLC and overcomplicate it, and then bundle things together whenever possible. The fewer carriers you have involved, the less likely something's going to go wrong, or you're going to have an argument between one policy or another. Maybe the language on your base policy is different than your umbrella, and there's a coverage gap there of some sort. So I'll get this all the time where clients have, a bunch of properties, and, you got literally millions of dollars worth of properties, and you want to separate everything out to save $100 or $200 worth of insurance premiums per year. Like, is that juice really worth the squeeze? Like, protect what you have. Don't be cheap about it. You don't want to pay too much, but sometimes the lowest insurance price isn't always the best insurance policy. So All right, so the flip side of this are things that cannot be insured under personal lines. So if they can't, then they're going to go to commercial paper after that. So there are some advantages to that. Higher liability limits available. So you're typically going to get a per occurrence and an aggregate total on a commercial policy. So you've probably seen a 1 million, 2 million limit. These policies are called lesser's risk. So they're for people that own rental properties, be it habitational, be it office, industrial, anything like that. They all work relatively similarly. So separation of assets, and that's the main thing the attorneys are going to tell you to form the different entity. Typically, if you get sued, now I'm sure there's some exceptions to this, but really only the assets that entity owns are going to be on the table for that lawsuit. So it separates you own from what your business owns. So a good thing to do. The ability to list multiple locations on a single policy. So, if you have 30, 40, 50 rental homes, it's not always possible to find one policy for them. You're going to need to find a carrier that likes each individual risk. So typically you're looking for like kind. You can have multiple apartments on one policy as long as they meet the underwriting requirements. I've got policies that have single family homes combined with apartment complexes as well. Great for people that are doing the purchasing and selling a little bit more frequently, right? Because instead of writing a brand new policy every single time, you're just adding and subtracting a location. Now, if you have mortgagees and impound accounts on each one of these things, the mortgagee is not a problem. Different impound accounts are, so I would say plan on paying the premium yourself if you are going to do it that way. But I think it's a great way to do it. Customization, the BOP or CPP is either business owner's policy or commercial package policy. A business owner's policy is kind of like a homeowner's insurance policy for a commercial entity. It's a prepackaged thing with a lot of things included. That commercial package policy, you can customize and pick and choose what you want. So it's kind of an either or. There are some disadvantages as well. You got fewer carry options and more specialized markets. You got higher insurance premiums for the most part, and you've got more complicated policies. So if you're going this route, you're going to want somebody that knows what they're doing and understands the policies. All right. So considerations for commercial lines policies. Take advantage of the asset separation. If you're actually going to go through the headache of having a commercial policy, spending more premium for it, I do see this as well, where they own a 100-unit apartment complex and they own it. A business doesn't own it. So you can't write that on personal lines paper. So why would you want to interchange the two in a situation like that? Something that happens to you personally, if that asset is worth tens of millions of dollars sometimes. And I think this gentleman here was saying, you get in a car accident or something like that, don't have adequate protection for that. Well, now if you own that real estate in your name as well, that's on the table in a lawsuit. So separating it out is going to actually protect that. So if you have to insure it commercially and go through the headaches, form a commercial entity for it, do yourself a favor there, and purchase adequate liability coverage to protect the assets of each LLC. So the more different LLCs that you form, in certain cases, we can insure them all in one policy, but it would really have to be a situation where they're all very like-kind assets. If you do different LLCs for everything, you're typically talking a different insurance policy for all that. And make sure you have enough liability in that insurance policy to cover what the LLC owns. And again, combine similar risk into a single policy whenever possible. You're going to have one blanket liability policy that covers all the different locations that you own. So it's an easier way to do it. It's a more cost-effective way to do it. All right. So I have some clients that flip homes and renovate them. So there's some special insurance considerations for that. Number one, be honest about what you're doing. I've had that all the time happen where a client will tell me, they'll call me up, oh yeah, I need a quote for this rental insurance or rental home. And then the carrier goes out to inspect it and the thing's had a fire. They didn't disclose anything. They're in the middle of flipping it and renovating it. Well, if you read the contract in just your standard rental home insurance, there's going to be exclusions for vacant homes, coverage that's taken away, and also coverage for misrepresentations. So just be honest about what you're doing. There's a policy out there for this type of stuff. It can be rented either for individuals or for businesses. Most of these that I do for people, they're doing them under business entities when they're doing flips and renovations like this. The coverage is more expensive and it's less broad. I mean, it makes sense if you've got a place that's, you know, had the entire interior burned and it needs a bunch of renovations, they're not going to give you a replacement cost on something like that. You've got a lot of work to do before that asset is in a spot where it deserves a replacement cost policy. So yes, the coverage is not as broad. Fewer perils that you're going to get. It's actual cash value, so based on condition in the time of loss, but you can actually find a policy that will do that. There's limited specialty markets. I actually have a client who does a lot of flips, and I looked through my emails trying to find the name of this program. Several years ago, I looked into it, but it was especially designed for real estate professionals who were doing a lot of renovation and flips and things like that. And it was great coverage. I looked into getting insurance or getting appointed with that market and never heard back from them. So if anybody does that and they've got a great market for this type of stuff, I'd love to hear it. I will say with this one, he used to do most of his locations on that program, and now he does most with me. I think because they're probably priced too good to be true, and sooner or later, when you see something like that, that coverage runs out. But anybody knows of a market like that you're using, I'd love to hear about it. I'm typically using Foremost or American Modern, have pretty good products, or you have outside commercial carriers in the excess and surplus lines, but those are typically very expensive and fully ends on that. So you know, anybody doing that stuff, we do have markets for them. So what do people always want to know when it comes to that stuff? They want their stuff protected properly, but they also want it to be easy, and they don't want to pay a ton of money in insurance premium because nobody really likes doing it. So as far as ways to save time and premium, I would say keep it simple. Wear the personalized shoe when, that says if fits, so there's a typo. Haven't done a PowerPoint presentation since college probably, so but yeah, if you are that person that has a couple of personal lines homes, it's more of a side business for you, just do it under personal lines insurance policy. Don't overcomplicate it. You'll have way more options to insure it. It's going to cost you less money. Put an umbrella in place and be done with it. Location. That's big in real estate, right? Anybody tried to buy insurance in California at all recently? It's not fun right now. If there's trees anywhere near it, it's going to fair plan. So I would say when you're looking at potential investment properties and you want to consider what is and isn't good from the insurance standpoint, anything in the trees is going to cost you a lot more and have way fewer options for it because there's a lot more risk for wildfire. We've seen what's happening in California. They're our neighbors, and unfortunately all that stuff spills over to us. So pretty much all the outskirts of town are getting more and more difficult from an insurance standpoint. I mean, my home backs up to Peavine Mountain, and I'm ineligible with 80% of my carriers. I've lived in Northwest Reno for 42 years, and I've never seen a fire damage any homes out there, a wildfire, yet it's still ineligible for whatever reason. So pay attention to where you're buying homes. More central is probably going to be better from a wildfire risk. Age and maintenance obviously matter as well. So if you are purchasing older homes, it's not necessarily a problem at all, but has the roof been updated? Has the furnace been updated? Is there any knob and tube wiring? Is there any old galvanized plumbing? Things like that. All going to make it harder and more expensive to get insurance. So keep it boring, I said, especially as far as commercial. I have a client, and I won't name names because he's a member of this group, but he tried to buy a fraternity house at one point, and fraternity houses, you can imagine, probably isn't super easy from the insurance standpoint. So, screen your tenants, keep, I would say require renters insurance. Something like that is going to offer another layer of protection for you as well, because your tenants a lot of times aren't going to have a ton of assets. So if they do not have renters insurance protection with you named on that policy, who do you think is the next person to get sued there? And like I said, carry higher deductibles and avoid the smaller claims, especially in this market. Plan on self-insuring any little losses. Right now, it's a really odd insurance market. Because of inflation, carriers just do not want to write business right now. So don't give them any reason to turn you down or cancel the insurance policy that you have. And then how I can help as far as my value proposition, if any of you guys are interested. We're a small local independent brokerage. So like I said, we owned it for the last 3 years and been working there almost 10 at this point. And all of myself and my 2 partners are local Northern Nevada. We are very relationship focused. And I think that's something that's unique to us at our brokerage versus what you get at some of the larger brokerages. Everything is segmented there, personal lines versus commercial lines and new business versus service. So a lot of times you'll get somebody that will sell you on your new commercial insurance policy and you're never going to talk to that person again because it's a totally different team service in that policy. Well, we sell, and obviously we have staff that helps, but I'm always available to all of my clients. And the moment I sell you the policy isn't the last time that you hear from me. I'm pretty hands-on in all of it. We do personal and commercial lines expertise. So if you're in an area where you might be gray in between, am I a commercial guy? Am I a personal guy? Do I have a little bit of both? We can help with all of that. And then over 70 years combined insurance experience between my partners and I. So I'm 14 years. So obviously I'm the junior partner here as far as longevity goes, but I like to think I'm the smartest. So don't tell my partners that. And again, hopefully I haven't bored anybody too much, and I very much appreciate the opportunity, and I am open to questions if anybody has them. Yes.
Does this work for different states or only in Nevada?
Yeah, the advice is applicable to pretty much any state. As far as us being able to help you, we are licensed in any state that touches us. Plus Texas and Arizona. So depending, it's getting a little bit more difficult in this market. So principles, yes, all the laws state to state are pretty similar. I'm licensed in California and I can't write a damn thing there right now, unfortunately, because nobody wants any business there. So yeah.
So clarity, I guess if you own the property in 2 or 3 in Nevada, you have another one in Virginia. If they came to work with you, it would only be those 2 here in Nevada.
Yeah, if I'm not licensed in that state, I can't help. If there was enough business for me, I'll go get licensed in a state. I think that's how we ended up licensed in Texas, to be honest. Some really big policies down there. So, but yeah, typically, the agent has to be licensed in the state that you own the property to do business there. So, gentlemen.
What is your recommendation, or like in what number of homes do you suggest like moving away from umbrella to LLC? The first slide you said like some insurance covers only up to 8 homes.
Yeah, it usually when by the time you hit 9, you're going to be forced to insure it commercially for sure. So if you own 8 or fewer, and it makes sense, your assets are enough to where you can get a personal lines policy, an umbrella policy that would cover that. I would go that route personally if it were me. An attorney might tell you something different. But
because one of the points you've been mentioning about like try to get the insurance about your net worth actually. So if I'm going to say like you own like 8 homes, the maximum for insurance in Reno, probably 500,000 homes and on average now. So 8 is like 4 million.
Yeah, typically.
Yeah. So like I can go for like in 5 million over there, or I can feel like probably it might be risky, or like after I cross like in 6 homes or something, probably what do you suggest your client saying that probably this might be the time you may need to consider your rentals?
Yeah, by the time you're over 5 million-ish in net worth, I mean, we could always try to get you a larger umbrella so you could start that route. But I mean, as far as what you're worth, you also got to consider your liabilities on those properties as well. Do you own all $500,000 homes free and clear, or do you have mortgages on those? So it all is something that you would want to consider on that. But yeah, if you're anything over 10 million for sure, form a business entity for it, but you'd kind of have to just dive into your particular situation.
And another question I had is, sorry, you talked about the rental insurance.
Mhm.
If I'm going to screen a tenant which has a rental insurance, do you think that I can bring that in my insurance policy and can it reduce my premium or something like that?
For your tenant?
Yeah.
No, you can't
like,
insure your tenant's property
If the
under your
renters
policy.
the tenants have the rental insurance,
Does it
can I
lower
reduce
his
my
premium?
insurance?
With some carriers, yes, although the discount is usually super small. But some will actually require it depending on your market. I have carriers that insure apartments and they will only do it if you require all of your tenants to have renters insurance policies. So to me, it's a no-brainer. I mean, I don't understand why anybody wouldn't do it, but I guess it does make it maybe a little bit more challenging for cost of tenants or attracting tenants. But I mean, it's like $200 a year for a renter's insurance policy. So would you really want a tenant that can't afford that in one of your properties? I don't know. I mean,
could you explain a landlord policy versus a homeowner's policy?
yeah, so your landlord policy is designed for rental properties. The homeowner's policy is designed for properties that you live in, either primary or secondary. So they're going to react to how they insure the home almost exactly the same. But the difference is your homeowner's product is going to have a bunch of built-in coverages for your own personal property. Whereas the tenant's, the landlord's policy typically only covers the home. It covers you for loss of rent if something happens to that, but your tenant's personal property, things like that, not included under those policies. So you're not going to insure your tenant's property. And some people actually think that. I've had clients call up and have losses and like, oh, we need to get this covered for my renter. No, it doesn't work that way. That's their responsibility to insure that stuff. So yeah, that's the main difference is the
That's what
personal
their
property
renter's
coverage.
policy is insurance,
Yeah.
is their stuff.
Yeah, and I mean that stuff adds up way quicker than you would think. So why would you not want to insure? Typically, like I said, you can get 20,000 in coverage for your personal property and 300 grand in liability for $200 a year. Like package it with your auto, and it's almost free half the time because of the discount. So I think the tenants would be insane not to protect themselves anyway. So yeah.
Does it matter how you're using the property? For example, if I have a single family home that rents it, or a family that rents it on a yearly lease versus condo that is Airbnb out.
Yeah, absolutely. So it's going to be an eligibility issue. I would say probably 50% of the carriers right now don't want to play ball with the short-term rentals, the Airbnbs. They're looking for long-term tenants. So if you do, and I actually should have put that in the presentation. So thank you for bringing that up. It's really not expensive and easy to do. So if you are Airbnb in a property, be honest about it. Probably cost you $50 or $100 more a year. And the reason they look at, more renters in is just a little bit higher risk type of situation. So, but it's easily available and relatively inexpensive. So if you're doing it, be honest about it. Make sure your market's okay with it.